Hi, I'm Peter Mesaros, and my goal is to provide you with independent investment education that is full with experience to help you instead of the financial industry. I am from the Netherlands. I'm a self-made investor, teacher. I would like to help you to navigate in this crazy world. This is my second interview with Rick, and in this first part you can learn about the Fed and where to invest now. The second part will be a brief lecture about how to value mining companies. The third is about the principles to navigate this environment and the precious metals manipulation. I urge you to watch these as well. Hi everyone, I'm Peter Mesaros from Financial Fitness, and my returning guest today is the legendary Rick Rule, the founder of Rule Investment Media, but he really needs no introduction. It is my pleasure to welcome you, Rick.
Well, it's my pleasure. Thank you for having me back.
Thank you. So, I know that you are a credit analyst and a natural resource expert, but I bet everyone is asking you nowadays about the current market conditions and market environment. The stocks are declining, and in a minute we could discuss why we could be even happy about that. But we are keen to learn your opinion about the longer term effects of the Fed. Just shortly, if we can. Can the Fed, you think, really raise interest rates and successfully decrease its balance sheet? Because I don't want to put words into your mouth, but I think the time will come, the pain will be so large that they will chicken out. What do you think?
Looking 18 months down the road, I absolutely agree with you. I think that in 40 years, we have built an economy that is too government dependent and too dependent on negative interest rates. I think there's room currently to continue to raise rates and also to engage in quantitative tightening. I hope they do it. The way that you escape the expectation that we've come to have over the last 30 or 35 years, and the way that you escape inflation is a good old-fashioned recession. And I have a high degree of confidence that to the extent that they engage in a real taper and allow interest rates to rise, that they could, if they had the courage, tame the inflationary beast. But I think the pain that we would experience would probably cause both the electorate and the Fed to lose their nerve. We've been through this, Peter, before. Maybe you haven't, maybe you're too young. But some of your listeners will remember the decade of the 70s, the last time that we experienced substantial stagflation. And they will remember that ugly party got brought to a screeching halt by Paul Volcker, who allowed the rate on the US 10-year Treasury to advance from 5.5 to 15.6. There was a very painful period of 2 or 3 years where there was massive unemployment. There was a massive foreclosure cycle. But after that, the discipline that was re-injected into the market caused us to have a substantial period of prosperity. I don't know if we have the discipline as a society anymore, nor frankly the tools to cause that to occur. It's important to remember that when Mr. Volcker acted, government debt to GDP was around 25% of GDP. Now government debt to GDP is 125% of GDP. And one wonders if the federal balance sheet and income statement can handle higher interest rates, or if we have the fiscal tools available to us to manage the sort of precipitous decline that would likely be the result of a more accurate real interest rate.
Yeah, and I already see that they are more politically sensitive than back then. and they are not Paul Volcker. And for example, in Europe, where I come from, the president of the Czech Republic went to their central bank, and he fired everyone who wants to raise rates. So yeah, interesting time. So I also think maybe one time they can save the market again. Everybody will be hunky-dory, happy, but is it really good news? I mean, then we are one step closer to hyperinflation. I'm not saying we will have that, but one step closer. So is it really good news if they save us again?
I think, Peter, if you're looking for good news, you have to cause that news to occur for yourself, by yourself. You mentioned Europe. Europeans as a group, and I realize there's many tribes in Europe, but paraphrasing, Europeans in a group have experience with government management of the economy that goes back at least to Weimar Germany. And the consequence of that is that there's a generational knowledge among Europeans that while they do their best to participate politically and defend themselves, that they also defend themselves individually. That same sense is less well developed in the United States, where there has been a better experience with the system up till now, and where we have had a less politicized and less fractionalized society. I think the traditional European investor who understood that his or her assets and passport had to be in 3 different domiciles to protect oneself is a much more reasonable response to the circumstance that we find ourselves in than to believe that central authorities, irrespective of the flag they fly on their door, are going to do it for you.
Yeah, that's very true what you said. We should save ourselves and not let us saved by the government. Everybody should read this kind of books.
Yes.
Yeah, absolutely. And yeah, I don't say that we should measure already our wealth in ounces, but it's not far from the truth.
I do, as a matter of fact.
Yeah.
I run a parallel budget in grams. Whether or not people should do that or not is their own choice. But I do regard measuring my wealth in euros or dollars as measuring my wealth in a floating abstraction. I'm not sure either the numerator or the denominator. So at the very least, measuring your wealth in a second floating abstraction, which is to say gold, is a good discipline for you.
Yeah. I will have a related question later for concerning your bank. And we should give also a little bit of fish. We should teach people fishing, but we should also give a little bit of fish. Maybe it's not well cooked and served, but just the fish. If I look back 10, 15 years now for average investors, then I know what would be the best choices, like Franco-Nevada, right? What do you think? What are the best choices if I look in the future? What are the best choices now?
That will depend on what kind of investor and speculator you are.
I can tell you.
Fine.
For example, if someone has a portfolio of $150,000, $250,000, they like to invest in the best of the best. They hold physical precious metals. They diversify. They keep learning. So that kind of investor.
I think that kind of investor needs to follow on a course that is substantially similar to the one that's worked in the last 15 years. If your portfolio is around the best of the best, which is to say, if your strategy is to de-risk beta, that you think that the resource market's going to do well and you want to participate, then what you want to do is lower the risk of individual company failure. And you do that by buying the best of the best. Those are still the royalty companies. The Franco-Nevadas, the Wheaton Precious, in the oil and gas space, perhaps the ARCs, the Freeholds, the Prairie Skies. I think too, in the mining sector, that you need to look to very high quality companies with fortress balance sheets, because we don't know about the cost of capital going forward. And you need to look at those companies that have added tier 1 assets and sold tier 2 assets, which is to say companies that have continued to upgrade their portfolio. In the gold space, those names necessarily, I think, include Barrick, which are all tier 1 deposits. I would look at a tier 2 company, which is Endeavor, simply because of the juxtaposition between price and net present value, but also because of their track record, their 20-year track record for implementation in West Africa, industrial materials companies in the world, with perhaps a near-term focus on BHP, so that you get the benefit of BHP's oil and gas spin out into Woodside, but also including Rio Tinto. And if you can afford to take a bit more operational and balance sheet risk, Glencore, I say their political risk in and around, as an example, the corruption charges, and Vale. I also believe that if you believe that the circumstance in Russia stays unstable for longer, that you need to pay attention to companies that produce things where the Russian shortfalls will be problematic. That would prominently include Nutrien, the old Potash Corporation of Saskatchewan, which will benefit from any hiatus of potash and ammonia supply from Russia and Belarus. And also, of course, Vale, which would benefit from any hiatus in platinum. Long-term investors to the finest oil and gas companies on the planet. I'm talking about the Exxons of the world. If you want to come down a notch in quality, you look to Occidental Petroleum and perhaps Devon for US natural gas. And for my Canadian friends on the broadcast, I continue to be attracted to a package of very, very, very high quality Canadian producers, understanding that markets work and the oil price will fall, but also understanding that the Canadian experience has been damaged politically. And I think the winds of change in Canada will favor rather than disfavor the oil and gas industry, Mr. Trudeau and Ms. Friedland notwithstanding. So, you know, you would look at names like ARC, Freehold, Prairie Sky, Tourmaline, Peyto, Birchcliff.
Thank you. That was a lot of fish.
Yeah, I mean, every day that these markets are racked by turmoil and go lower, the valuations get better. And I'm not trying to say that 3 months from now the valuations might not be substantially better than they are today. What I have learned is that if you ask yourself the question, how low can it go? You miss the point at which you ought to say, I don't care if it goes lower, it's cheap enough now.
Yeah, and also you mentioned earlier this mistake with Exxon that you did not buy. Yeah.
Really stupid.
Yeah, okay. Thank you for watching part 1. Don't forget to subscribe to this channel and to visit Rick's Symposium. Please find the links in the description below. See you, have a nice day.